What is going on, guys? Nick here, back with another video. On October 27th of 2020, AMD announced its third quarter earnings, that it beat earnings expectations, it showed over 50% revenue growth from the last year, and it announced a huge $35 billion acquisition of Xilinx. The market reaction wasn't exactly enthusiastic, resulting in a 5% share price dip that day, even with all of the great earnings news. So I thought I would take a look at the situation and ask, does this acquisition actually make any sense? Is this a good thing for AMD shareholders? How does AMD benefit? And does this actually seem like it's going to work at all? So does this make sense? Over the past couple of years, AMD has completely turned around the trajectory of their business, and they've done this mainly by revamping their CPUs. If you don't know, CPUs are basically the computer's brain, responsible for processing actions and executing programs. Now, AMD has been working to gain market share in the data center business, and while great in personal computers, the problem with CPUs is they aren't the most optimal chip for data centers. Xilinx Senior Vice President Salil Raji explained some of the issues with CPUs in data centers. He said that traditional CPUs are not able to provide the performance scaling required for some of these compute-intensive workloads. He said that's why domain-specific accelerators are stepping up to take on some of these larger workloads. What he's basically saying here is to do some of the really difficult tasks like AI, video transcoding, or encryption, you need chips that can be specifically designed to do that task as efficiently as possible. CPUs are generic, and customers can't adapt them for specific tasks. And this is exactly where Xilinx comes in. They make what's called FPGAs, or Field Programmable Gate Arrays. These are chips that are designed so the customer that buys them can configure them to their needs. The other benefit is that as the needs of the customer changes, they can adapt the chip to that specific need. So imagine you had a Tesla vehicle that needed fixing. It may make more sense to take the Tesla to a Tesla dealership that has workers who are specifically trained to know how the Tesla car works and how to fix it, versus a local garage that works on all types of different vehicles. There's nothing necessarily wrong with the local garage, it's just the Tesla worker is far more specialized for that specific task, so they can do it a lot more efficiently. So now the next question is this a good deal for shareholders? For shareholders, what matters right now is this deal accretive or dilutive for their earnings per share? Accretive versus dilutive means that when the companies are combined and the new shares are added in, will this increase the earnings per share, which is called accretive, or decrease the earnings per share, which is called dilutive? In an interview with CNBC on the day they announced the deal, Lisa Su said that the deal is accretive. Now, the next thing that needs to happen is the combined company needs to achieve a high growth rate like AMD was prior to the merger. This is because high growth is what is going to sustain the high price to earnings ratio that you currently pay for AMD. Xilinx has historically had a much slower growth rate compared to AMD. Depending on the time span you're looking at, Xilinx managed between 5 to 10% growth. AMD, since Lisa Su's turnaround, only became profitable in 2017, but we've seen very impressive earnings growth over that time span. In 2018 and 2019, AMD earned about 30 cents per share, and in the trailing 12 months, meaning from October of 2020 to October of 2019, the earnings has jumped to $1.09 per share. Now, it is possible that Xilinx could slow down AMD's growth, but I've also seen a lot of reports saying that there isn't enough of a market to sustain AMD's growth long term. Adding Xilinx and all of their target markets helps AMD's growth in the long run and actually might be completely necessary for AMD to grow in the future. So now, how does AMD benefit from this? AMD takes away two major benefits from this deal. The first thing is that it increases something called the TAM. The TAM means their total available market. It just means that they're able to sell more products in more areas. AMD's TAM goes from 79 billion to 110 billion. Xilinx helps them out in the data center business, but it also adds 5G and automotive markets. Currently, AMD has no access to the automotive and 5G markets, and I think we can expect 5G and automotive markets to continue to grow for the foreseeable future. Now, the second great benefit for AMD about this deal is they were able to get this deal done entirely through stock. Setting aside the shareholders' perspective for a second, the business is using its stock price as currency, which adds no debt to their balance sheet. $35 billion worth of debt would have been a huge pill for AMD to try to swallow, and I do not see how this would make any sense to have done so. In 2014 and 2015, when AMD was on the verge of bankruptcy, it had about $2.5 billion in debt. So it doesn't make any sense for AMD to have worked so hard to get rid of all of that debt, to then turn around and acquire another company and take on more than 10 times that debt amount. Xilinx is already a proven, well-run business, so the chance of them suddenly falling apart seems pretty low to me. They've actually been gaining market share in their businesses. If the worst outcome is you end up with two separate but competent companies running under AMD, that really doesn't seem too bad. Now, if this video has been helpful for you so far, please take a second to scroll down and hit the thumbs up button. This video took a lot of reading and research for me to figure it all out, and if you can help me out with a quick click, I would be really appreciative. So, will this work? This is obviously something to be determined, but looking at the two companies, I don't really see any reason why it wouldn't. Both businesses produce very different products, and on their own, they've been extremely successful. So the question then is, when they start to combine their teams, will they work well together, and will they improve each other's businesses? So Lisa Su actually answered some of these concerns when she talked about the philosophies of both companies being very similar.
Okay, so Lisa, I'm looking at a press release dated 5 years ago. It's about Intel acquisition of Altera. The acquisition will couple Intel's leading-edge products and manufacturing process with Altera's leading field programmable gate array. The combination is expected to enable classes of products, Internet of Things, data center. This one sounds remarkably like your deal. The Intel Altera deal was a failure. How do you know this one won't be?
I think when you look at our vision, it's just very aligned. You know, we believe in high performance computing. We believe in adaptive computing. We have a very synergistic technology strategy. It's not like any one of us is going to have to change how we think about technology. We actually think about technology the same way.
Xilinx's Chief Executive Officer, Victor Peng, even previously worked at AMD. So let's take a look at the valuation and see how much sense the stock price actually makes right now. So Lisa Su has talked about wanting the combined companies to grow at about 20% per year. So we're going to use a 20% growth rate as the top end of the range. Now I would say she has always met and exceeded her expectations in the past, so I wouldn't be surprised to see the company exceed the 20% growth rate. For the bottom end of the range, let's use a 15% growth rate, which is somewhere in the middle of what these companies were achieving independently. If I put these numbers into my growth rate to fair PE formula, this range translates to a 38 to 58 PE. The trailing earnings per share for AMD is $1.09 per share, so that gives us a range between $41 and $63 per share. At today's current share price of $75, this would mean that the price is overvalued compared to its trailing earnings. Still, we should take a look at the 2021 projections and see if we have enough upside to make this worthwhile. Currently for 2021, the earnings per share estimates are at $1.81 per share. So that actually gives us a fair value range between $68 per share and $105 per share. The actual deal itself won't go through until the end of 2021 after dealing with regulatory approval. In the meantime, they'll have to continue to work as separate companies. Now, I did want to mention, if the deal doesn't work out, AMD will have to pay $1 billion to Xilinx as part of the agreement. That would be a pretty big hit, but considering AMD's balance sheet strength, I think they would be just fine. So if the merged AMD and Xilinx company can meet Su's 20% growth goal, I think you have a lot of upside right now. Personally, I have a lot of faith in Su as AMD CEO because of the incredible job she's done turning this company around. She's somebody that I trust will achieve the goals that she sets out for the company and is always thinking about what's best in the long term for AMD. Now, if you want to try some different growth rates and see how it changes AMD's trailing and forward valuations, my Google Sheet link is below in the description where you can do your own calculations. Now, just a quick disclaimer, I do own AMD shares and I plan to continue holding them for the foreseeable future. You should always do your own research before deciding if you should buy a stock or not, and take a wide variety of opinions and analysis to get to your conclusions. Now, if you like these types of videos and you want to see more, don't forget to subscribe and hit the bell notification so that you get notified whenever I upload a new video. And as always, thanks for watching.